And Fox on top of a little market history on tap. Today, we look back and we look forward because history might not repeat itself. But what's that line? It sure does rhyme. Well, what is rhyming and who is worrying? And could we ever again see all of that selling? 30 years ago this day, it was, of course, one for the record books. As Shep pointed out, a staggering 508 points sliced off the Dow, nearly a quarter of its value wiped out. That would be like more than 5,000 points today. That was then. We'll ask House Majority Whip Steve Scalise on why tax cuts are everything now, and South Carolina Senator Tim Scott on why that ain't happening unless his fellow senators can boogie and get a budget done now. All that, and Home Depot co-founder Bernie Marcus, who says Republicans fail at this, well, forget stocks. They might as well forget control of Congress. So many worries, so many issues, so little time. Does any of this sound familiar? Same deal. 30 years ago today, different players, different president, different issues, but in a way, if you think about it, the same market. Suddenly and uncharacteristically swept up in a sell-off you saw coming, and no amount of something called portfolio insurance was stopping. Now, I should know, because 30 years ago today, hard as this might be believed for some of you, my friends, I was there.
Well, there weren't exactly people fleeing themselves off buildings, at least not that we could see today, but there were a near record number of people gathering outside the New York Stock Exchange today to sort of witness history in the making and the opportunity to see incredible drops in the Dow right before their eyes.
I want to see what it looks like when it's in this condition. And then I wanted to see this stock market anyway.
We want to see a piece of the action, I guess, at Wall Street.
What they saw was program selling taken to the ultimate art form, as Wall Street's very biggest players stepped in and unloaded multi-billion-dollar blocks of shares, much of it fueled by mutual funds, hard hit by individuals pulling their money out.
And what would normally be a 50-point decline becomes a 100-point decline, and a 75-point decline becomes a 200-point decline.
The panic selling got an unlikely boost from Treasury Secretary James Baker, who tried to stop last week's bloodbath by suggesting over the weekend that the dollar needed to decline more. But that only opened old currency wounds, the same wounds the bond market has been licking for months now.
What has happened in the bond market is now being played out in the stock market, and I think it has more to go.
I think the stock market ignored what was happening in the bond market for a long time until suddenly woke up to it in the last 2 weeks or so.
To the end, market analysts are steadfastly refusing to even mention that word crash to describe what's going on right now. Instead, they like to look at it as a correction that still has to work itself out. But what they don't know, and in fact readily worry about, is how far down that correction really has to go, how long it will take, and exactly how many more people will be hurt in the process before the market does decide, if it decides, to turn around.
And here's the big news on that. Only 2 weeks later, I would finally complete puberty. Holy cow. What are you laughing at, man? My thanks to my friends at the Nightly Business Report. Just remarkable looking back in time. FBN's Conall McShane, who wasn't even born at the time, joins us in Times Square. How people are looking back now. Hey, Conall.
Hey there, Neil. It really is remarkable in many ways. I think more than anything else that the modern day market, to repeat that terrible day 30 years ago, would have to fall more than 5,000 points on the Dow. But since then, by any measure, the run has just been remarkable. I mean, in the short term, we've had more than 50 record closes on the Dow since President Trump took office. In the medium term, we're the 9th year now of a bull market. And in the long term, look at these numbers we can put on the screen for you. Since that day, the Dow has risen about 1,200%. 1,200%. S&P 500, a broader measure, up 1,000%. The NASDAQ, about 1,700%. But on a day like this, you do start asking that question. Can what happened in 1987 happen again today?
I think it can happen. I think that people feel that investing in the stock market is easy and lucrative. So people do invest, and without the safeguards.
I remember that. I was a young guy.
Do you think something like that could happen again?
Sure, I think so. Because right now, look, stock going up every day.
I'm not so worried because it's happened in the past and we live right now, correct?
Right.
So it's happened again, we're going to live again, generation after generation.
You know, it's almost like we saw, Neil, a few ghosts of 87 early in the day today when there were some jitters in the market and the Dow was down triple digits. But when you know it, things calmed down and there seemed like the budget process and the tax reform process were looking up in Washington, and the market started to look up as well. We had a pretty strong close. Such a calm day today compared to back then. Now back to you.
Yeah, in fact, to your point, up and at a record again. All right, thank you very much. Connell, I'm too young to remember this historic moment. McShane. All right, in the meantime, these guys might have. We'll see. Trader Ted Weisberg over in the NYSE, FBN's Charles Payne in New York, market watcher Gary B. Smith in Vero Beach, Florida. Teddy Weisberg, you're an institution, of course, there. I remember talking to you back then. And you go back in time, a lot of people say, well, you know, history doesn't repeat itself, but that line that it does rhyme. What's rhyming today, or is there anything out there that worries you?
Well, everything always worries me, Neil. If it didn't worry me, I still wouldn't be here 50 years later. You know, you always have to have a chair to sit in when the music stops. You know, the markets are never irrational. There's nothing really rational about markets and the prices of stocks. And markets always tend to overdo it, both on the upside and the downside. But the reality is, in 50 years, there's only been 3 disastrous time periods in my career: 73, 74. The crash of 87, which was a one-day wonder, if you will,
right,
and 08 and 09.
You know, that's true. You were talking about 1987, right? You were.
Yeah. No, 1887.
Thank you very much. I'm joking, my friend, just joking. Charles Payne, you know, when you look back at that, you know, in retrospect, it's easy to play Monday morning quarterback and say, gee, a lot of this was telegraphed in the volatility the week before, just the Friday before. The first 100-plus point drop in the Dow, we slid about 4.5%. We slid substantial amounts in the prior days. So, Charles Payne, to you on this, and whether the volatility signs are what we're missing, or interest rates so low, the sense of global order so fixed that it's a ways off, anything approaching this?
I think it's a ways off, but obviously, to Teddy's point, it will happen again at some point, but I just don't think that we're there yet. For a number of reasons, whether you talk about where interest rates are, the rate of inflation, the global economy, and also the so-called irrational exuberance. You know, people just are not going crazy over the stock market. The average person, even those who love President Trump and cheer him on and cheer on his agenda, aren't necessarily plowing into the stock market. So I see the fundamentals really good. You see how the Dow closed higher today? It wasn't driven by the high-flying tech names. The companies that are building this nation, Vulcan Materials, Martin Marietta Materials, U.S. Concrete, those kind of stocks are taking a leadership position. I like that. Obviously, there will be crashes, but another history lesson is when you look back, we always get back to a new all-time high as well.
Yeah, it is remarkable. We're going to show this a little bit here, looking at charts of the Dow, you know, really going back almost a century, that these gyrations, and Gary B., you've educated me on this over these many years, that they can be sharp and noted, but over time, the trend is your friend. Now, you've recently gone all cash, but that doesn't mean you're all anti-market, right? Explain what you're doing.
Well, first of all, when Charles is so complacent about the market, it scares the heck out of me. So that's what I've learned over the years, and I love Charles. To Teddy's point, and I'll get back to answer your question, I disagree that 87 was a one-day thing. These crashes that we saw in 1987, and even to an extent in 2011, the crash in 87 actually started back in about August or so, and it was like going over the Niagara Falls. It started slow, but we just stopped going up and we started selling off. So the crash on that Monday in 87 was the culmination to an overall 35% sell-off. Now, to your question, what am I doing? I'm still trading very short term. For example, I bought this morning on the opening sell-off, but then sold at the end of the day, a nice little gain. That's not for everyone, though. I get worried, as I said earlier this
Teddy
morning.
Weisberg, when you're looking at these markets right now, and you're looking at interest rates that are a fraction of what they were back then, I think we hit a high of a little over 10% of the 10-year note. We're now at 2-something.
Yeah.
So a lot of people look at that and say, well, I don't see it there. What do you see?
Well, I just want to get back to his comments about 87. 22% in one day. We've never seen that since. We never saw it before. But the fact is,
he's a kid, Ted. He's a kid. What does he know?
But between 1982, between 1982.
But Teddy, we had sold off 35% total.
Let Teddy, we'll go to you, Gary. Go ahead.
Between 1982 and 2000, the Dow went from Dow 1,000 to Dow 10,000, including whether you want to take your 38% or 22% in one day. The fact is that was a blip, in an 18-year period where the Dow went up 10 times. What you're doing is terrific. You're just playing. A lot of folks that I know and what we do is we're investors for the long term, and over the long term, being long equities in spite of 87, in spite of 08 and 09, and 73, 74. In hindsight, they were spectacular buying opportunities, not selling opportunities.
But, you know, could you encounter, Charles Payne, a 10-year point where you don't have that? I mean, after the meltdown, you know, back in 2007, 2008, as far as the NASDAQ was concerned, you didn't make up that drop that had descended for quite a while. So how do you play that? What's your advice you give people when you say long-term? What is it?
I agree. You know, some of these big names like Microsoft and Cisco only recently got back to their all-time highs. This is what I will say, to Gary's point. The C word for me is not complacent. I'm never complacent. I am confident. I'm confident because I work very hard, and I'm looking at the evidence. We're in earnings season now. Listen to what corporate America is going to tell us now. Their business is growing. People are spending. Companies are building. All the building blocks of an economy that supports a market rally are there. If people want to day trade it, fine. But I agree with Teddy. If I'm a long-term investor, I stay in this thing.
All right, guys, I wish we had more time. Fortunately, we don't, because you guys are getting very nasty with one another. But no, seriously, I want to thank you all.